Moving ahead, we have a market expert, Aashish Somaiyaa, rather a market veteran, CEO, White Oak Capital AMC, joining with us. Aashish, good morning. Mansi this side. Thank you so much for giving your time to ET Now this morning. It's a pleasure talking to you right now.
Thank you. Thanks for inviting me.
Yeah, so Ashish, the first question to you is what is your view on the texture of the market at present? Because we see a lot of volatility, contingent scenarios, and uncertainties coming from the globe front. But at the same time, if we remember the latest AMFI data, the conviction of the market participants in the equity markets is still intact.
Yeah, I know. I think market is in that sense a bit delicately poised because when it's going nowhere for months and months together. I mean, if you really see right from September 24 onwards, we have been kind of range bound. That's where we made the last peak. Somewhere a couple of months earlier, we went down below 22,000, and then obviously we've just been going nowhere. Now, the way the things are stacked up, obviously there is, as far as domestic economic conditions are concerned, we are doing better than what we were probably a year back, same time. Maybe that is giving some downside protection, and the external macro is obviously preventing any upside. So, on balance, if you really ask me, we are very delicately poised. Any bad news, and we will see probably we run the risk of, downside. As far as what you mentioned about flows, so Mansi, that habit doesn't seem to be changing, unfortunately, because 2, 3 months back when we went to 22,000, we saw that there was a reduction in net inflows. We saw discussions about stoppage of SIPs. And in the month of June, when we again started, kind of coming back to winning ways, started making new highs, the confidence seems to have kind of got restored. So that basic behavioral psychology doesn't seem to change. It would have been great to see so much enthusiasm at 22,000. But yeah, that's how things have been.
So what will take the markets out of this range, Ashish Bhai? I mean, could it be global news? Could it be something on the earnings front? Because right now, there's nothing on the horizon which will generate fear or generate upside momentum.
Yeah, so I think that's why I kind of stuck my neck out and said that there is more risk for downside because when there is no news, generally we say when there is no news it is good news, but not necessarily so for the market because if there is any surprise lurking around the corner, then you are poised for risk. I feel that earnings, of course, there has been some improved trajectory, at least what we saw as of 31st March, 30th June, obviously we are just seeing the numbers. So next few days, if there is that trajectory continues, because in March there were some positives when you look at small cap, mid cap, or when you look at the broader earnings rather than just the front line, because it always starts with IT and then it kind of spreads out. So as we go along, maybe earnings is something the trajectory needs to continue. And secondly, if you see, as far as the external environment is concerned, when these trade deals, etc., are being, everybody's following social media for trade deal announcements, and we still seem to be alive, at least as far as that is concerned. So, if there is any positive news on that, or maybe the earnings, then there is maybe we break out into a new area. If it continues like this, then I'm afraid that, eventually people will lose momentum.
Right, interesting take. Hi, morning, Ashish. This is Shrishti also joining in. But with respect to the earnings, help us understand that any sector where you're building your hopes on at this point in time, because we have seen IT major TCS disappointing, and well, of course, the other stocks are also reacting to that. But which are the other sectors that you are building your hopes on?
So, Srishti, it is, there are no clear sector bets, really, if you ask me. I think one will be much more happier, like, if you see when the March quarter result season ended, and by the time we went into May is when, the realization kind of came about that if you on balance look at the broader performance across mid caps and small caps, that turned out to be the positive. So if you really ask me this time around also, if we get if we get the trajectory to be broad, if we find a broadening in terms of the earnings, I think that will be the positive thing to look at, not necessarily betting on any sector. In fact, we generally never bet on sectors, but right now I'm finding our portfolios they are fully focused on bottom up, and I don't find very many. If I benchmark with BSE 500, I don't find very many stark underweights or overweights as far as our team is really concerned. And we generally manage portfolios which are reasonably balanced, but yes, we do have underweights and overweights. Right now, we are not actually sticking out heavily into any sector really. The portfolios are reasonably balanced. It's only the bottom up that we are watching for, and hence that's why I said that what we saw in March, if we find that breadth continuing, that will be great, rather than worrying about any one sector.
Not the sectors, but the themes and the models. So, Ashish, if that's the game, then tell us about the benchmarks versus the broader markets. It's always a debate whether to stick with the benchmarks or to shift to the broader markets, and not just the benchmarks and broader markets. But if you see the comparison in the last quarter, Nifty 50 companies grew only 3.5%, while the next 450 companies grew over 20%. So, how should the market participants decide and create or draw their portfolios then?
See, that is precisely what I was alluding to. Thanks for spelling out those numbers. That's precisely what I was alluding to, actually. Uh, Having said so, if I have to name themes, see, first is, BSE 500 is what we generally benchmark with. Yes, of course, we manage a large cap fund where the top 100 is our benchmark. But by and large, whether it is, flexi cap, whether it is quality, special opportunities, large and mid, I mean, for most of our funds, large plethora of funds, BSE 500, even for our PMS AIF, BSE 500 is the key thing to watch for. And from that perspective, if I have to spell out, I would still say, where we are slightly overweight would be themes related to industrials and manufacturing. But there again, more the mid cap and small cap. If you see consumer discretionary, for example, that is something where we are overweight. Financials, in totality, we may not be overweight vis-a-vis BSE 500, but you will find that the composition is very different. So it's more NBFC, apart from the banks, the usual suspects, it's more NBFC and capital market companies. And then the last one where I find significant overweights are, say, healthcare. So these are the broad areas that one finds more ideas and more overweights. But yes, I hope that the breadth is what we can get.
So Ashish, one side there is good macro, rates, liquidity. Second side is macro, which is expensive. When do you see macro deteriorating, or when do you see micro becoming better? Something has to change. ऐसा होगा तो boring हो जाएगा. Then markets will not need a fund manager. Then
But Nikunj, counterintuitively, to be honest, the last 6 to 9 months is good for people like us because stock picking is working. If you really ask me, personally, I found that 2023 and the first half of 2024 was difficult because, it was all hot hands, right? I mean, whether you are in small cap or not, whether you are in PSUs or not, whether you are in railway infrastructure, defense, so, either you're in or you're out. It's the macro, the top down, which really determined, I mean, the match starts, the toss is done, and the match is over. That is the kind of environment we were in 2023 and early part of 2024. Last 8, 9 months is great for stock pickers because the alpha is coming back very, very sharply. And that's why I've been harping on the breadth and the bottom up. Coming to your question, I feel that the case for the domestic micro continuing to improve is probably what one is watching for, and that is a high likelihood. But it's just that if you see the external there, the upside gets capped because of 2 or 3 reasons. One is that we are going through a time correction because, 1 year back where we were on our micro and our fundamentals was not looking encouraging. Only in the last 6 months, there is change of RBI policy, there is change of liquidity, the rupee has kind of stabilized. So a lot of things have started working for us only in the last 6 months. So the domestic conditions improving, high probability. But the external macro, which is so unpredictable with US economy, the tariffs, the geopolitics, and I mean, there are many hotspots in the world which are, lurking, to cause escalations and cause turbulence. So I'm afraid it's going to be boring for some more time. That's my sense.
That felt like a 360-degree analysis on the markets. Thank you so much for giving your views on markets, and have a great day and a great weekend to you.
Thank you. Thank you for inviting me. Thank you.